Pardon? Huh? तेजस्विनावतीतमस्तु मा विद्विषावहै ओम शांति 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 हरि ओम श्री गुरुभ्यो नमः हरि ओम writers with welcome address. Before that, online participants are you able to hear us? I'm just checking. Can somebody respond online? Janani, அங்க கேளுங்க ஜனனி. அங்க online participants. Okay. Right. Audio is poor. Okay. Check audio is poor and போடுறாங்க. பாருங்க. Okay. Thank you. So before giving welcome address, I would request all of you to keep your mobile in silence or switch off, whichever is preferable to you. So good evening. It's a warm welcome from Chinmaya Academy for Civil Services. I would like to welcome Sir Ravichandran Sir, retired IRS officer, former Principal Chief Commissioner of Income Tax, and he has been very kind to accept our invitation to give this guest lecture. Immediately, spontaneously, when we requested him, amongst his busy schedule, and ma'am, Mrs. Geeta Ravichandran ma'am, she is also a retired IRS officer, former Principal Chief Commissioner of Income Tax. So we are very happy to have you here, ma'am. Welcome. And Dr. Ram Mohan, he's our guide, and there is no day I don't get a call from Ram Mohan ji. And age is just a number for him. So he's very active, and very inspiring personality in that aspect. I'm getting a lot of inspiration from Ram Mohan ji and a lot of guidance from Ram Mohan ji. Welcome, Ram Mohan ji. And Radha ma'am, again retired IRS officer. So welcome, ma'am. Welcome to this guest lecture. And I welcome all the participants offline as well as online. So let us continue with this. Thank you. Thank you so much, sir. Okay. Color and What is my regards to my great friends, Mr. and Mrs. Ravichandran here, and we also got a bonus. She has her sister has also come from USA. She is also from the IRS. What is the core element of budget or finance? Tiruvalluvar says, ஆகார் அளவிட்டுதாயினும் கேடில்லை போகார் அகலா கடை. See, your income may be less. As long as it is contained within your expenditure, then it is an ideal budget. So we are running deficit budgeting due to some compelling infrastructural reasons, but this is the core principle of budget. But budget, the word budget comes from a Latin word which refers to a leather bag in which the finance papers were kept in ancient times. So it was. Then Indian budget, government budget, derives its authority from Article 172 of Constitution of India. There, every annual expenditure and income statement is called the budget. The first budget in India was submitted in 1947 December by R.K. Chettiar. But the forerunner to the budget system in India is James Watson, a British officer. In 1890, he submitted a budgetary statement, income and expenditure. So he is the forerunner for the two income tax commissioners sitting here. He is the person who introduced income tax in India. Then the budget was going on basically from 1947 to 1948. Income and other things not much development activities took place, but the budget from budget through budget, the development took place. The infrastructure development. The first factory set up in India is in Madras. The ICF of Southern Railway, ICF in the Madras. That is the first of the infrastructural factory set up in India. But in 1991, an epochal event have occurred with Manmohan Singh becoming the finance minister. It was called epoch making budget. LPD, and expenditure. Economy which was tied to budget constraints like contract license and everything. I remember the Indian government set up a lot of factories. They were good purpose, but their output was very limited. A Japanese team came to India at visiting the factories of especially iron and steel factories of India. When they were leaving, then the press conference, some person asked, "What is your impression before you coming to India, and what is your impression when you leaving India?" He said, "We came with an impression India is a rich country. Now we are going back with an impression that it's a very rich country." The questioners were surprised. How is that India is a very rich country? The Japanese representative said, "Only a very rich country can afford to invest crores of money in several projects and several development activities.
and is satisfied with a meager return of 20%. So only a very rich country can do that. So it was a problem, the waste of money. Then what is our ancient text that talk about budget? The Arthashastra in 4th century BC, Chanakya prepares a comprehensive budget. We focus on monetary revenue, fixed financial discipline, fiscal discipline, and welfare activities. These three were the hallmark of the budget, which was prepared in 4th century BC by Chanakya. Kosa means treasury. He said the heart of a government is kosam, that is budgetary revenue. So well-developed financial systems were there, good expenditure management, and there was no deficit budgeting. Everything was kept within the revenue, and then he also kept a separate money to deal with disasters. And the officers were treated very strictly, correctly. Nobody was allowed to exceed his limits. The Chanakya said that they put a condition: revenue officers should be transferred once in 4 years. Otherwise, they are likely to become corrupt. So periodical transfers were made by Mauryan administration. No deficit budget was allowed. Revenue was generated through agriculture, mining, commerce, and forest. These are the 4 sources for revenue in ancient India. Then later, with the commercial activities taking place, many developments came. The Mauryan taxation budget had only two sets of taxation. For the people who are not very good, very welcome, very well-developed financial status, they are made to pay 1/6 of the income tax. And people who are better off, they were made to pay 1/5 of the money as the revenue as the taxation. And bad things, the items which are bad for the health of the people, like the tobacco was not there, but something was there. They were made to pay higher rate. So higher tax for that. Budget and accounting, there were detailed but budget was there. Expenditure is closely monitored, and very interestingly, in the 4th century BC, the Cambodian government appointed independent auditors like C&AG of India to monitor the budget. Then welfare activities were given importance, like irrigation, water tanks, and everything. Nobody was allowed to exceed his limits. They are very famous. We must be all studying history was a subject. Junagadh inscription of 2nd century BC by Ravichandran. The king himself put an inscription of the audit check over him. There was a big lake in Junagadh. The king took it upon himself to repair the lake, putting on new walls and everything. Then the committee of auditors, they went through the expenditure. So they have made a statement. The king has unnecessarily spent a lot of money. He exceeded his limits in spending money. So the entire expenditure which was spent on the development of the lake should be recovered from the king directly from his own income. So the beauty of that, this information is given by Rudradaman himself in the Junagadh inscription of 2nd century BC. So this was ancient India was perfect in the budgeting system and expenditure monitoring, and several centuries have elapsed. From 1991, the epoch-making budget, and we are at the current budget also has got a very interesting factor. Ravichandran will mention all those things. He is expert on the field to be ably assessed by Mrs. Ravichandran wherever the need comes. So I welcome all of you for the program.
Thank you so much, sir, for that interesting opening address. With that, we'll now move on to the guest lecture for today. Topics: budget for the NCO financial year 2026-27 and the track to development. Budget outlines the path for becoming Chief Commissioner Cherry, Kalakshetra Foundation, Chennai. And currently, she took coverage. And Change Board of India as Chief GM at National Academy of Trade, which is IRS induction training, patches of foundation presentation, and other IRS. It right, Ravichandran.
Light will come here. Yeah. Ram Mohan, Gita, and Desikan, and Radha, and my dear. I think all of you are aspirants, no? All of you are aspirants for some competitive exam. I will go with the budget first, maybe. I don't know, whichever the way it is. Look at it both. Yeah. So perhaps, I just thought that I would give you an overview of what is budget all about, what has happened in the current budget. Then I will touch upon the economic survey. The budget, the current budget, I think, I don't know how many of you had an occasion to watch that live on television. I think generally budget means people think about the taxes and whether something is reduced, whether I'm getting any tax relief or something like that. That is how people look at it. So from that point of view, this budget has been a big disappointment for everyone, that everyone says, oh my God, no limits have been no changed and no tax rates have been modified, no slabs have been changed. And yeah, oh sorry. Oh sorry. So no changes are made. So if you look at it from that perspective, everybody looks at budget as a tax. But here, what we are looking at as a budget is basically a account of receipts and expenditure. Where I'm getting the money from as a country, where I'm going to spend this money as an expenditure. This is basically receipts and expenditure statement of India. So if we see this budget had many kind of, the features. That's why I wanted you to break down the budget to such an extent that this budget not only has this kind of, the proposals for taxation or how to augment the revenue. Basically, when you look at receipts means majority of the receipts is only by way of a tax. I'm not looking at it, how I'm going to increase the tax. I'm also looking at the ways and means by which, without taxing the individuals or the company, how I can raise the resources. Similarly, expenditure, a lot of money goes in revenue expenditure, capital expenditure. There are two kinds of expenditure we always look at it, which is good. Revenue or capital? Capital is good because any expenditure in capital you do it, it is going to have a multiplier effect. More and more investment I make in capital, I'm going to get a long-term benefit of it. Well, revenue expenditure is basically like a salary, interest, and pension, and all kinds of payments which are there on a day-to-day running expenditure, which government kind of a motive is to reduce the revenue expenditure and also to increase the capital expenditure. That is a broad understanding, every government does it. So like Sambhagan was saying, there is an aspect of budget deficit. It's not a question of, that budget that you have, always you have revenues which are matching up your expectation. So there is going to be some deficit. There are three kinds of deficit which I talked to you about it. What is primary deficit, revenue deficit, fiscal deficit. I think when aspirant, you should know what it is. A deficit budget, which is roughly around 4 to 5%. So that means I'm spending more than whatever the rest is by 4 to 5%. So to that extent, if you look at it, the revenue deficit target, which is that is something around 4.5% is something that I'm there. That is an amount that I have to borrow. Because when I have a deficit, what do? The way that we do for it, we also have the borrowings. So that is also one of the aspects of the budget. Here we are going to look at where I'm getting the revenue from, where all I'm spending it, where all I'm spending for the capital expenditure, what is the kind of deficit I have, how am I going to reduce the deficit? Okay. So, where is that? Where should I press? There. Down arrow. Oh, sorry. I don't want you to kind of, look at the images because I have taken those images from the budget paper just to give an understanding. So more than the images, just focus on what is written there. If you look at it, basically whenever the government presents the budget, they also look at the theme of the budget. In the current budget, they gave the theme that we want the stability because the country has to be very stable. We can't have many governments you must have seen all around the world. There is an unstable government because of the unstable finances that they kind of face. Similarly, fiscal discipline. What is fiscal discipline? I need to have the deficit under control. I can't be having huge borrowings, paying huge amount of interest. So I should have some kind of a fiscal discipline. Sustained growth. It's not a question of me suddenly growing 8%, 10% and suddenly falling about 4 or 5%. That's not good for a country. So we need to have a sustained growth. And whatever the growth you may have, the inflation is there. What is inflation? The kind of a increase in the value of the goods that you purchase. Basically, if there's inflation there, it is going to affect the public at large. What I buy for 100 rupees today, if the inflation of 5%, it will be 105 rupees. So I have to pay 105 rupees to buy the same product which I bought. So government tries to control the inflation so that they can keep the public happy. At the same time, your growth also will be robust growth if the inflation is under control. So these are the 4 kind of defining areas of the budget. And the other economy has been growing very well. It is one of those largest growth that we have recorded as far as we call it a GDP. That's a gross domestic product increase. So that is the highest growth that we can see as far as India is concerned. How do we achieve that growth? It is not a question of GDP that is growing. So if you look at our own component of a GDP, the percentage of GDP, where is it coming from? India. Majority? Service sector. So you have to see that where we want to be. Okay, service is happening automatically. We have a lot of services that we are rendering. What is the aspiration of the government? Manufacturing. So we wanted to become a more of the GDP should be focused on manufacturing. Why? Because manufacturing gives not only the product, so your dependency on other countries comes down. Manufacturing also gives you kind of a employment to a large extent. It can also give you an export where you can, or if you are increasing manufacture, it has a threefold impact. That means I can provide oh, sorry. Is it okay? Huh? Yeah. So when you look at it as manufacturing, it is one of the areas where government wants to grow. What is the component of manufacturing in GDP now? So we wanted to look at it to be pushed to 25%. Similarly, agriculture contributes around the same percentage, around 15 to 20%. So the service sector is contributing more than around 50%. So to that extent, we would like to see that agriculture and the manufacturing grow tandem with the GDP growth. Then, these are some of the pillars that government thought, okay, I'm having a budget, what is it I'm looking at? One is the sustained growth. You have to have the foundation should be good. There should be centric because if the country is going equal to Gini coefficient, where there is a kind of a rich and poor differences if it is more, it is not good for you. You need to bridge the gap between the rich and poor. That is where they want the people-centric development and the trust-based governance. This is one important thing in the budget. The trust means, people should be trusted. If you look at the tax department specifically, earlier we were collecting cases to verify, investigate, and try to put the industry or the corporate with a lot of scrutiny. Now those things have come down. I trust you. 99.9% of what you file, I accept it. So to that extent, like customs, this budget, there are a lot of measures that are coming there to make sure the customs decisions have been simplified. Actually, what you bring, what you bring, camera, it. So you file for this. Environment of trust-based governance. So the ease of doing business, that is one of the areas where everybody has been complaining. So much of licensing, so much of license raj, that has been the bane in as far as India is concerned. To that extent, I don't know how many of you are aware. Anybody knows what is the position of India? We were earlier in about 100 plus position. Now we have come to 59th position. So if you look at it, we need a lot in ease of doing business. However, that single window clearance, reducing the licensing requirements, and making sure that it becomes easy for people to start the business and commence whatever the production. So these are some numbers I thought I'll share with you because I don't know how many of you are, because if you are, there is a lecture on budget, I can't, look without the numbers. So these numbers are essential numbers I put in there. GDP. If everyone says what is the GDP of the country, what rate it is growing, it's about 8%. Where are we targeting? This is 26. We are supposed to grow at 8%. Where are we targeting this 27? It's about 10%. And the GDP, there are the constant prices without looking at inflation of the value. Another is the nominal GDP accounting for the inflation. Nominal GDP will be always more than the GDP at a constant prices. So if we calculate GDP at a constant prices, it is growing at around 7.4%. So inflation around 2%, it will oscillate between 2%. Absolutely, that is government. Inflation will be under control. That is why there is no pressure on what? What impact that will have? Any idea? The monetary policy. If you look at the monetary policy, the rates are generally brought down to make sure that, people tend to buy more because they have more money in the hand rather than putting money in the bank. So our monetary policy is all over the world. People have been comparing India with other countries. We will have pressure to reduce the interest rate. Our interest rates, if you look at it, is hovering around 4.25%. So that is where we have been maintaining. Another important issue is tax to GDP ratio. The tax department has been collecting a lot of taxes. Are we good enough in collecting the taxes is one question all of you pose. You all can say the numbers. Okay, now income tax is collecting some 28 lakh crores and GST is collecting some 14 lakh crores. All that you can say, but the end of the day, is what is tax to GDP ratio. GDP growth. See, if we calculate the GDP to tax, direct taxes, DT means direct tax. The direct tax is what? Income tax and corporate tax. And what is IDT is indirect taxes. Indirect taxes, customs and GST. So to that extent, the direct taxes contribute to 6.9% of the GDP. Indirect taxes contribute about 4.3. Which should be higher? Direct or indirect? Direct should be higher. Why? Because it's a progressive taxation. Indirect taxes is not progressive because you are taxing everybody from rich to poor. Somebody buys a matchbox, the same tax is paid by the richest man as well as the poorest man. Whereas in income tax, you have a gradation where the poor people pay less tax, rich people pay more taxes. So that's why every country will aspire to have a more direct taxes and the less indirect taxes. So if you look at the ratio here, thereafter it's 6.79% to GDP, that is 4.3% to GDP. Overall tax to GDP is something around 11.2%. So this is much lower than many developed countries. If you look at developed economies, OECD countries, US and Europe, there the tax GDP ratio is something between 20 to 25%. That means we are not collecting that much tax which we are supposed to collect. Anybody can tell me the reason why? Because in India, we not only kind of collect taxes, we achieve social objective through the tax laws. All of you must have seen income tax law consists of more than 500 sections in the law, which is 533 sections. Where you know that we go through lot of exceptions to backward areas, and we kind of promote lots and lots of benefits to vulnerable sections of people. So Income Tax Act is full of the kind of like trust, an exemption from payment of taxes, like hospitals, educational institutions. Exemptions are provided. People don't pay tax at all if you are doing a charity. To that extent, we pay a lot of tax, and there is a statement called a tax foregone statement. We started capturing it in the budget. I want you to look at it in the finance that financial statement of affairs, as well as in the economic survey. There is something called tax foregone statement. That means how much I forego by way of Section 80 or exemption for trust or exemption for some companies and all that. That money comes to close to 10% of GDP. So if I calculate my collection, actual collection of 11%, and the taxes I forego because of all the exemptions and deductions, it will come to something around 20 plus. So to that extent, if there is an explanation that we can give why India's tax GDP is lesser than the rich countries, those countries don't have much of an exemption which are given. Even if they give, that will be hardly 1 to 2%. They have that exemption. In our country, close to 10 to 12% is an exemption. Then we have the borrowing. This is, debt to GDP. These are one of the important factors which determine whether the country is solvent or insolvent. Okay. Country should not borrow so much. In our country, if you look at debt to GDP, it is something around 55.9, 55.6, but it was about 56.1 in the last year. So from there, it has come down to 55.6. Normally, it has come down. Our aim is what? 50%. It's not that you can survive without borrowing. Country has to borrow. But what is it that I'm intending to borrow is up to 50% of GDP I can borrow. Then World Bank says, well, okay. You know what is borrowing of? A lot of people invest in the US Treasury bonds, something around 130%. So if you look at it, then something twice than whatever it is, they can borrow, but still that economy fundamentally is strong. So there are countries which can borrow more. In Europe has more than 70 to 80% of the debt to GDP ratio. To that extent, so we have a robust kind of a fiscal discipline of borrowing less. Then we have a amount. Okay. How much is it that we borrow? That is 17.2 lakh worth in numbers. And what is the net borrowing after dividing that or reducing the interest payment? It is something around 11.7 lakh. Because interest payment is basically the one that whatever the borrowing you have to pay the interest on. So there is something all of you must have seen. You get a question of commission, 16th Finance Commission, what is the deductible pool? As far as it is concerned, the states have been allocated 41% as a vertical development to the states. So that is coming to something around 1.4 lakh crore for this year. Actually, what has been given is around 1.4 lakh. So some more numbers. This is where I told you about the capex. So capital expenditure. So if you know the country is developing budget, I'm not only saying I'm spending money aware. Revenue expenditure and spending it on capital expenditure. Where does the capital go in the budget? So capital expenditure was, if you look at it, it was only 1.7% of GDP in 2020. That was the COVID year. And we were not able to improve. But if you look at it now, this is a very, very big number. If you look at it, all of you should know this is 2.9% is a good number. So we improved the capital expenditure from 1.7 to 2.9. What we are trying to do is, there again, aspiration is around 3.9% of the GDP is what we are going to aspire to invest in capital. That is our future. So if you look at it, the capex to the total expenditure is a capex to GDP. The second number is a capex to total expenditure. About 20% of my expenditure is capital. That means 80% goes for revenue, 20%. And what I'm done now, 30%. Have you seen that? That means what? What is the trend now? If you look at it from 20 to 25, what has been the trend? The revenue expenditure and increasing the capital expenditure. To that extent, I am not wasting money on this revenue expenditure. Cutting down revenue expenditure is the biggest thing government can do. That means, if you look at the home budget, it is like investing in your own house or land or jewelry is much more valuable than spending on your food and holidays and whatever. But your own consumables. So you have to reduce your consumer expenditure so that you have a saving can be put to long-term use, which can be beneficial to you and your family. So then, if you look at the capex, the numbers are the same. It is increasing 10% year on year. Where does it go? The road, that's the major 2.85 lakh crores. These are all lakh crores. The railways, 2.52 lakh crores. So if you see this 10.52, half of the expenditure is going where? For the infrastructure of road and railways. So my capital is there to develop the infrastructure. Automatically, this will have a double. First, these things will help you to speedy transport of goods by good rail network as well as a good network of ports and whatever the roads. Then the defense, after this Operation Sindhu, the vulnerability. Earlier also we had the Chinese incursions. So we had this kind of a defense expenditure that is very much essential that has gone up. That is 1.71 lakh crores. Then the transfer to states, as per the Finance Commission, it is about 1.66 lakh crores. These are the major expenditure. If you look at it, primarily our capital expenditure is on road, railway, defense, and part of it goes to the states. The rest of this all is telecom and housing and other expenditure. So this is the same thing which I put it in. Okay, this is one chart that all of you should know. Whenever some budget is made, they tell you where the rupee comes from, where the rupee goes. So it is basically dissecting the expenditure. Here, if you look at it, the rupee is taxes basically, income tax and the corporate tax and customs and GST. If you calculate all this, that will be around 64%. So that means 65% of my revenue is coming from the taxes. That is the major contribution. That's why government is wanting to increase the kind of collections from the taxes and by plugging the leakages, at the same time keeping the duty or the taxes less. This is really magical kind of exercise somebody has to do. They have to increase the collection also. At the same time, they cannot really let this be felt as a very kind of hurting the common public and not able to consume more. Yeah, exactly. Yeah. Yes, sir. Right. That's another factor which you rightly said, but that will contribute around 2%. If you look at the GDP contribution to agriculture, 15%. If you calculate that 11% or 15, if you look at it, in 5 agriculture income scenario, like what you are saying, what would be my increase in the tax attrition? Will be 2%, 1.7 basically. So that's also one of the factors. One of the tax foregone, we are not taxing the agricultural income. If I tax agricultural income, I will get another 1.5 to 1.7% of the increase in the tax collection on the GDP. That's possible. That gets captured to a large extent because that doesn't kind of affect the leakages. But again, if you calculate, there is a black money, some exercise has been done by a lot of studies have been done by NIPFP, National Institute of Public Finance and Policy. They are estimating something around 1.5 to 2%. So if you look at it, if at all I have, that every country has it. It's not only India problem. So if I plug all the black money, ideal scenario. So how much is that? It will be something around 1.5 to 2% of the GDP. So like agriculture maybe 1.5 to 2%, black money maybe 1.5 to 2%, tax foregone because of course exemption 8 to 10%. If you calculate all this, I can add another 13-14% to my 11%. It will come to something around 25%. You can explain it away. Why is it less compared to developed countries? This is one of the way of explaining it. Okay. Apart from that, I will come to one more question. Maybe the tax base is also very low. Unlike, that we cannot really say more and beat around it. It's one of the explanation you can give. Economics, you can't say one of the right explanation. It's one of the explanation you can give, but our tax base is very less actually. So this is where the taxes come for 65 to 70%. Rest of it, borrowing, I told you 24% comes from borrowing. Non-debt receipts by disinvestment and all that which comes in. So that also takes care. And non-tax revenue is also one of the areas where we mobilize the resources. Rupee goes, basically what we have already told you. The pension is 2 and state share is 22%, finance commission 7, interest is major portion, 20% goes there. And the subsidies are also 7. The line this line will be there. Band will be there. No issue. Okay. Next is capital receipts and revenue receipts. This is where I was trying to tell you. You see there where we have been increasing. Our capital receipts are also increasing from 16.2 to maybe it's not 16.2, maybe the 25, 26. Now it is going up. Okay, doesn't matter. Don't bother. It's okay. Better than. So revenue receipts have been increasing from 30 lakh crores to 35 lakh crores. That is what we anticipated for the next year. Now it is 33.4. Did you see there is a dip in the revenue? 34.2 to 33.4. Actually, budget estimate and revised estimate. Why it happened? Because last year, if you remember, we increased the exemption limit up to 12 lakhs, no need to pay the taxes. Earlier it was 5. So lot of reform has been done. That is why government thought already there is a dip there. If I tinker with this, in 17, there was a lot of discussion in the public that we would get more exemption. But what you are going to lose out because of that, your tax base will come down, your taxes will also go down. Already it has gone a dip of over 1%. Government doesn't want to play with that. So that's why tax rates will remain the same. They want to, tax buoyancy is good. Tax buoyancy is another measure by which the tax collections are robust and it is increasing from industry. So every corporate is paying more taxes, they want to maintain the buoyancy. Effectively, the capital expenditure, I told you, it has gone up from 13.2 to 17. Revenue expenditure is not much. If you look at it from 36, in 25-26, we have gone up only about 38. We were less than a kind of we maintained it as much as possible, around 8 to 10%, not much that we can play with it. So that way, I think it has been kept under control. So the revenue expenditure, where all it goes, basically pay, pension, subsidies, and interest. So one interesting analysis I want to tell you. See, there is a pay that goes up. Nobody can do with the salary because every time the DA allowance, DA arrears, all that increases. The government has the biggest problem is it has gone up from 2.49 lakh crores to 3.52 crores. There's a big substantial increase is there in pay. Look at the pension. Nobody can do anything about it because there again the bonus allowance and increases are there. That also gone up from 1.99 lakh crores to 2.77 lakh crores. Look at subsidies. What happened? 4.46 to 3.8. That's why I gave a percentage here. So subsidies is a part of the expenditure. Earlier it was 15%. Now it has gone down to 10%. So government wants to move the subsidy because one is that it is not going to the right kind of the people. It is getting frittered away. We don't want the subsidy to be the one which is kind of dragging the overall discipline of the budget. So that's one trend that you can see with the current government. They have been systematically reducing the subsidies. Interest portion, where are we? Gone up by 7%. It was 25%. it has gone up to 32% of the expenditure. Why? Because we are having so many infrastructure projects where you have to borrow a lot of money. I want you to see this figure juxtaposed with where the capital expenditure is going. These are not for anything, this is going for the capital. So where is it? This money is being spent on a projects that are being spent there. Interest portion, because other interest has gone up, because the capital is borrowings are more, interest portion will come under revenue expenditure. Clear? Then the defense, you know where the defense is. So when the situation was very peaceful, it was 2.29 lakh crores, only 7%. Now, this is very hot everywhere in the borders. So we have gone up to 4.92%. So close to 5% of our expenditure goes to the defense expenditure. So this you have to see in the light of this. This will give you a good input for you to write a good essay wherever you get this, and maybe some questions also you can answer. Yeah. Yes, that also comes there. I'll take it up in the next slide. I'll show it to you. So the total transfer to states, whatever the revenue, non-tax revenue, how much is getting transferred? So this is amount, see the slide down, where the transfer to states have gone up from 18.7 lakh crore to 26.2 lakh crores. This is the money which is, as I told you, from the Finance Commission, 41%. This is the money that goes to states. But here, one issue that you may ask is, maybe I will deal with it. Yeah, this is what the tax, if you break the tax. So I told you already that 53% is coming from direct taxes and rest from direct taxes. If you break the tax here, where the tax is growing, where the tax is not growing. Gross tax, anyhow, it grows 27 lakh crores to 42 lakh crores in the last 5 years. But what has happened to the corporate tax? You see 7 lakh crore, it just went up in spite of the rate reduction. If you've seen that in 24, 23 and 24, there was a drastic reduction in corporate tax to 25% from earlier rate of 35%. Even then, it has not fallen. Ours is the lowest corporate tax in line with the most efficient economy. So that we want the companies to come and set up here to a less corporate tax. In spite of the corporate tax has not dipped, so it has been growing. It is about 10.82 from 7. Non-corporate taxes is also growing. So to that, individuals also started paying more taxes. More or less it doubled from 7 lakh crore to 14 lakh crores. Corporate 7 to 10. Close about 50% increase is there. Here, if you look at the personal income tax, which all the salary class and everyone pays, that has also grown from 6.5 to 13, just doubled. So that means what? The individuals have started paying more taxes in spite of the reduction in the tax. If you see that from 24, 25, there has been a marginal increase, but 25 to 26, they are expecting the increase to be more. Because why? They introduced a new tax system by which deduction exemption have been removed. You can opt to go for a new system or the old system. Government wants to do away with it. That has been working well for the government to see that they are having the tax buoyancy because of that. STT is the security transaction tax on stock market. That money is very less. Actually speaking, it's only about 78,000 crores expected, and it's about 55,000 crores. That has generated a lot of sentiment issues in the market. You know, the market fell down on the day because of increase in STT by around 50%. That is also very marginal increase, but that again the market has not taken it kindly. But what it contributes in the tax is hardly 55,000 crores out of the total amount, whatever that we collect of 38 lakh crores. So nominal GDP, if somebody asks what is the GDP number in lakh crore, it is about 357 lakh crore is a GDP number, nominal GDP. What is it in dollar terms? $4.3 trillion. Okay, we are the third largest. Okay, yeah. So return of income is one number I want to tell you. The returns were, how many people are filing the return? 6.9 crore in 2022. Now it has gone up to 9 crore people. For a country of this size, with a working population of 75 crores, active working population of, if I say this, increased income and all this thing, about 30 crores. I don't have people who are paying that much tax. You look at it, even a country like US is about, even though they have a 30 crore population, they will have something around 22 crores people pay the taxes. In India, a country of 130 crores, how many people are paying the taxes? Hardly 9 crore people. So if you look at it, even the working population, our numbers are hardly about 15 to 20%. So this is an area that we have to keep it in mind. Similarly, for the GST collections have gone up from 14 lakh crore to 22 lakh crore. Increase is about 17%. This is one of the factors government has been very happy after GST was introduced in 17. They feel that there has been increase year after year. Initially, they were getting only 60, 70,000 crores per month. Now they are getting per month 2 lakh crores per month. That means close to 24 lakh crores they are collecting it by way of a GST. The GST is a direct indicator of how the economy is doing, because every good that you produce, you pay the GST. That to the GST is with the input tax credit that has been given. That means I'm not paying dual tax on that, but it's getting reduced. So to that extent, this actually captures the production much efficiently than the normal kind of a VAT system or even the general excise duty that we had before. So how many taxpayers? This is one number I want you to see. GST, only 60 lakh businesses are paying taxes. Now there are 1.5 crore businesses are paying GST. So to that extent, that has also gone up close about 2.5 times. So next, this is DBT, direct benefit transfer. This is one of the flagship scheme of the government, where how much money gets transferred, and this is most efficient. Most of the state governments want the delivery to be done through this, around 176 crore. Don't look at the number, they're saying that it's more than the population, because the same kind of person will get multiple benefits. So that I think benefit covered is about 176 crore. It basically the PDS benefits and the Narega, PM Kisan and fertilizer subsidy, they are delivered through the DBT. And close to 3.4 lakh crore gets, it is pilferage free, and by and large it reaches the people directly. Okay. What are the changes that happened as far as Income Tax Act is concerned? So primarily, there is a new Income Tax Act that they brought in. It's called a new Income Tax Act, which completely overhauls the whole section. They want to reduce the section. They want to make the compliance easy. They want to make the forms simple, so that it becomes easy for people to pay the taxes. So that is the objective of it. So this act has come, is going to come in effect from 1/4/2026. Some rules have been notified even yesterday. You must have seen in the papers. So the forms have been notified. They are very simple forms, very easy, online. It automatically populates. The moment you put in the form with your data, with your PAN there, it gives you 90% of the information on the form. So you don't have to do the auto population facilities are available. So then the important change in this budget is the TCS. The two kinds of tax that we collect in advance. That is called, one is TDS, tax deduction at source. Another is called a tax collection at source. Both are collected in advance before even you earn the income. It's an expenditure that you make. Like you buy the property, there is some TDS. So you go on a foreign tour, there was a 20% TDS. You remit some money for study or medical expenses, there is some TDS. That's why we call it TCS here. They were charging something around 20% earlier on two packages, from 5% to 20%. Now government thought it is very expensive. That means all the foreign tours are becoming expensive by 20%. They brought it down to 2%. So why they wanted Indian tourists to travel more, so that that is one of the areas by which they can also attract people to come into the India by that. So there is kind of, they become the ambassadors of Indian culture and tradition and all. So I again think medical and education expense. A lot of Indians are going for medical treatment abroad as well as study abroad. So there also they reduce it from 5% to 2%. And there's one area where a lot of Indians who are working outside, in especially IT companies, they have something called ESOP, employee stock option. When they were staying outside India, they had bank account, they invested some assets, but they want to come back to India. They came back after 10 years, 15 years, 20 years. Suddenly we got an act called the Foreign Assets. That is a Black Money Act. So under that act, your foreign assets have to be disclosed in your income tax return. There is some schedule called the FA schedule, foreign asset schedule. Many people did not do that. Government has told them, if you are having the foreign shares, investments, if you are having a foreign assets, building you invested, a house you invested, I'm going to charge you 300% on that with the penalty and prosecution and all that. So people who genuinely went abroad and invested, they could not declare. They didn't do that. This act came in 2016. They gave a window of about 9 months period at that time. Not everyone could use that. So government has provided one more window now, 6-month window. For everyone who has an asset of 20 lakhs, you can still declare and pay just whatever the value of the asset that is there. 100% of it that you can pay, and maybe you can regularize. You don't have to face a prosecution and all that. So this is one, we call it as a foreign asset disclosure scheme, undisclosed foreign asset. There are two ways by which earlier we are catching the people in income tax. That is, one is called under-reporting, another is called misreporting. So we usually treat under-reporting as a less of an offense, misreporting as a big offense. What is under-reporting? I am getting income of 10,000 rupees. I show only 8,000. So 2,000 I don't show. So in such a case, the government has earlier said, okay, you have to pay 100% penalty and kind of tax maximum rate with the equal amount penalty. That means maximum rate will be 35-40%, equal amount will be penalty. For misreporting, it will be 100% plus another 200%, 300% was coming. So that means as good as you have not even reported at 10,000 rupees, then you will be end up paying some 300% on that. So government has now streamlined all this. Even the misreporting will invite only 100%. That means I failed to declare 10,000 rupees. If I report today, I'll be paying 10,000 plus another, whatever the tax on 10,000, plus another 3,000 rupees is the tax, plus extra 100% I pay, that means another 3,000. Only that I pay, so it becomes regularized. That means it's a big relief for a lot of people who have failed to report and they don't have to face the prosecution. This is where I told you the trust-based governance. Okay. They tell them to voluntarily do it. This is not information that government has. Somebody who has not done, you voluntarily come forward and pay the tax and then walk free. That is the attitude. So, interest for the motor accident is one of those measures where they were taxing the compensation given for the accident victims. So, that has been taken away. And the staggered timeline for filing the return, that is procedural changes. So, the deadlines, these are something which I don't want to say. This is one area I want you to remember. See, earlier when we had a tax law or a tax holiday, government always had a tax holiday for 5 years or 10 years. Never went beyond 10 years because even 10 years is a big thing. We used to give tax holidays for 5 years. That means if somebody investing money in a special economic zone or a backward area, they make them to set up like that's how the Pondicherry something has come up, something came up in Hosur. You must have seen in a lot of areas where whomsoever sets up an industry there, they get some tax holiday. Now what we have done is, because we found that global economy is creating lots and lots of issues with supply chain, nobody is kind of tariffs are being imposed with purity measure. Government says up to 2047 tax holiday. Imagine this is something unthinkable in a legislation like this. That means they're giving a certainty. Somebody comes and sets up a factory today in a kind of the export zone for a cloud services, global cloud, because global cloud, everybody wants to set up their own global centers in India, whether it is the global capability center for research and development or the cloud services center. So those centers, they can be a data center, they can provide to Indian customers, and they have Indian reseller entity also will be there. That means they sell it through Indian entity to the people who's over on the cloud, they can use that Indian reseller. There is no tax on that. Imagine this is going to have a huge amount of impact there. A lot of foreign companies will come and set it up, and they are going to get the tax benefit. It will kind of provide opportunities of employment for lots of Indians. Plus, it also provides the data. What is the other hidden advantage? What is that? Data resides in India. Okay, privacy. So with the Privacy Act that has come in there, government has been talking to Facebook and LinkedIn and all other companies, WhatsApp to keep the data in India. They have been fighting this before different forums. So now with this, what happens? Your data, your Indian data will reside with the India has a capability to host the data. So they can tell them that no, you can't say I don't have a data capability to store. You please store it in India. Okay, that's what is the idea of the government. So the next is advanced pricing. And this is one of the piece of legislation. Like I'm coming to set up a business in India. I'm coming from US. I'm investing some $10 million. I would like to know what is the tax that I pay. So when I come to I have a private report that says that, okay, your tax will be 20%, 25%. Only some taxman will make an order saying that, no, I'm going to charge you some more than that, 50%, 60%, because your income has to be calculated this way, and the transfer pricing and international tax adjustment they will make. then your income go anywhere, but you come up with a calculation that if I'm going to pay this much, and if you have to pay so much, it is not viable. You have to close down. So this is happening actually. So government has told them that you need to have a advanced pricing arrangement. That means when I come with a business proposal, I go to the APA mechanism. There's an officer who handles it. I tell them, you tell me what is the tax. I don't want to be saddled with the liability later. Today, you tell me what it is. So he goes to an order. Yes, this company, this business, for the next 5 years, I'm going to charge you only 15%. That means whatever services you have on that, 15% is the revenue. I'm doing service for 100 rupees. I'll be paying only tax on 15 rupees as my income. On 15 rupees income will be whatever 25% I'll be paying. So that certainty is something that they brought in by this. So this is something that APA we call it. They say people are not kind of accepting. Tax officers will say, okay, APA will be there, I'll still do whatever I want. Now government has said no. If APA has decided, it is mandatory, you cannot change it, you should follow it for about 5 years. And they have to conclude within 2 years because they were keeping it for a long time. A person cannot wait to make an investment unless you tell them quickly that what is the tax. So that also has to be concluded. Buybacks. I don't know how many of you understand what is a buyback. What is buyback? See, the companies have a lot of shares. Let us say a company has about 1 crore shares. Each share is a value of 10 rupees. 10 crores is the authorized capital or paid up capital of the company. Suddenly, company finds that the share valuation is not good. I want to reduce my capital. I want to buy back the capital from the public whom I have issued. So if I have some capital of 10 crores, I want to buy 5 crores. That means 50% of the share I want to reduce. Then when company announces it, because company has a cash to pay. Company has some cash which is available in the reserves. They say that I don't want to have so many shareholders, I want to reduce. That time the tax was something that, which nobody was paying. This time government has said, because the fellow who bought the shares at X price is now giving it to you at 3x or 4x. He's having a capital gain. Why should you pay the tax? So now they ask the company to pay the tax. And also, the promoters have to pay more taxes if he is surrendering the share to the company. This is one of the measures where government wants to raise the revenue because a lot of buybacks are happening by Indian companies because they wanted to. Earlier, they had a foreign player who had a stake. Now they want the foreign player to go out and they want to become fully 100% owned by India. So they wanted to make sure that these changes are happening because India is becoming by self-reliant, by itself company has a capital to invest in that. A lot of corporate balance sheets are very healthy. They have a lot of money lying in the capital. So they brought in this to see that some tax can be taken out of that. Okay? That's called a buyback tax. SCT is what I told you, that has gone up from 0.2% to 0.5%. And customs advance ruling, the same advance ruling which I told you for income tax, when I import a dutiable goods, what was happening is, let us say I'm importing this, whatever the remote. So I thought that, okay, the remote is costing $1. I'm bringing it here. Duty is about 30%. So I can sell it to $1.3. So something around, if I say it's costing about 120, 130 rupees. So 130 rupees in the market, somebody will buy with my profit margin 150, 160 rupees. So this is what my calculation. Suddenly consumers will do, no, this is not 30%, it is 80%, 100%. So when they say this, I can't sell this product for 250 or 300 rupees because it's a very price sensitive product. A lot of products are there in the price range between 130 to 150. So all the consignment which came in my this thing, I have to lose because I can't even push it in the market or I have to sell it at a discount below the cost price. So government has made sure that the same thing happens with the customs advance ruling. So that is also 3 years to 5 years. Because for 5 years when I'm importing something, whatever the price you tell me, 30% duty, 30% duty. Don't change it in between. Don't put, you remember one case recently happened, I don't know. Chennai customs, somebody was demanding money and something happened. He has to leave the goods. He could not sell the goods and it was lying in the custom bonded warehouse. It generated a lot of interest amongst a lot of people. So that man said, I'm not going to do business in India. I'm just going out. Somebody in a script, he said that. So consequent to the government made sure there is certainty in the customs duty when the businessman comes here. So the MAT, I don't know anybody knows about MAT? Called the minimum alternate tax. What is MAT? I have a company. Always the companies have a lot of depreciation, lot of expenditure, interest, to the incur loss. Most of the companies initially, if you look at it, they may have a revenue of 10 crores, expenditure of some 12 crores. So they will have a loss of 2 crores. These companies were not paying taxes. So government thought sometime back, maybe it's about 20 years back, to bring in something called a minimum alternate tax. Even if you incur loss, these are not actual losses, because you're claiming depreciation of 30%. Depreciation is what? Basically a cash, because you can keep the money and you can invest for the future. It is not that, it is going out to you. It is there with the company. So government thought, I will have a calculation by which you should pay a minimum alternate tax of 10%, 12%. That is it, you pay today. Whenever you make profit, you can adjust this money. That means I'm paying back because I don't have to pay the tax because I'm a loss-making company. Under the MAT, I will pay about 10 to 12%. After 10 years, I have 11% tax. Whatever I can start adjusting that tax. Like a TDS, you can adjust. This provision government has now changed it to, no longer it is a creditable. Now you pay MAT, it is final tax. That means even if you are a loss-making company, technically, you have to pay MAT of 10 to 12%. That is compulsory. And similarly, the people who had the credit earlier, you better liquidate it within a period of 5 years. I have permitted you to do that. So then there's the basic customs duty that has been reduced for microwave and VCD for aircraft, for defense, and the tariff rate on personal goods, which has been reduced because some people are importing personal goods. How does it impact? Anybody can tell me? I don't know how many of you are importing this games and gaming devices and from abroad through the Amazon, eBay, and if you're doing it, the goods which are available abroad, earlier you're doing it through somebody that where the taxes are, duties are very high. Now with this, you can import very freely. Whatever the goods you import anywhere from the world, as an individual through the own selling platform, you have to pay only 10% duty. That's all. That means you want the latest phone which is not launched in India, which you want to buy from somewhere else, you can buy it. What you're going to pay ultimately is the 10% duty. That is for a personal consumption, not for the business. Chalo, next one would be, this is something which is, I don't want to talk much about it. Basically, these are some of those measures and developing the mountain trail, turtle trail, bird watching trail, and digital pilot scheme for, two of those schemes which I thought you can take notice of it is, one is this, sorry, I can wait. Yeah. Yeah, but what happens is ultimately, you have to look at the taxes as the one where I'm gaining something. I invested 10 rupees in the share. Today the share has gone up to 50 rupees. 5 times has gone there. What government is telling them is, pay at least 12.5%. See, if there is a gain, there is a tax. Whatever I'm giving you, a lot of other benefits and depreciation and lot of allowances I'm giving, when you are exiting, you don't like to exit. I'm talking about the promoters exiting. A lot of promoters, that means what? You are not invested in the company. You are selling the share and making money. When you're selling the share and making money, a promoter, I would like him to pay. He is not investing the money in the company. He is taking it for his own welfare. Hostile takeover, what happened? It is good. In a way, if you look at it, hostile are friendly. Wars are automatically the person, the might is right. If it is a question of now when you're liberalizing the economy, it's a question of, that competition commission is there to watch over. Other SEBI is there to take over, code is there to watch over. If the regulations are there to prevent hostile takeover, but still if somebody is coming through this, you can't stop this. The clearance from SEBI and clearance from CCI. Okay. So here, university township is one of the important decisions that has been taken in the budget because they wanted to develop the university as a hub. A lot of universities with a huge amount of economic activity can go. Many universities, you must have found, they have a startup hub, they have incubation centers, they have a lot of industries which are becoming part of the university. Why? Because earlier, the jobs which are being created, a lot of engineers who are not become employable because their qualification are not meeting the requirement of the industry. Now, what government is doing is industry will be there, education institution will be there, there will be a partnership with this, and the industry will also be located in the same campus where there is a township there. So you know that I'm studying here, I'm going to be doing internship there, I'm going to be employed there. So that's the concept of university township. Girls hostel in each district and telescope infrastructure. Some of this for upskilling. This is one of those tourist guides because this is one area where we have not been able to market our tourist sites. You must have seen, some of you have seen abroad that even they don't have the legacy and history like what we have. Some people talk about it for 5,000 years, 2,000 years, 3,000 years. Every place you go there, every temple you go, people say minimum in 1,000 years they talk about it. So our countries do not have that kind of a legacy or a history, but they make a lot of money by marketing it. So here we are trying to do that with the 10,000 guides who are going to be certified and be taken care. And destination knowledge for documenting all the places of interest. So that you go to that website, every site of importance will have the data. What is this place, when it started, what other things are there, so that people can do these are available archived at one place where you can access it. And global big cat, that is okay for the tiger, mountain tail, 15 archaeological sites. Tax reform, there is one word which is being used is safe harbor. I don't know, some of you heard in the budget. It is safe harbor is something like taxation can be anything, like especially IT and IT services. Because when IBM is setting up a center here, they are developing a software and exporting it there. Always there used to be a kind of a issue. How much profit I make? Because they will do it in multiple centers where they will be creating this. It will be 100 rupees worth that I'm making a good, exporting it somewhere. What is the profit attributable to India is what is being taxed. Earlier that can be, I can say, you have done 80% of the work in India, 70% work in India, I can tax you on that 70% of the income. Now government has said nothing doing. The safe harbor provision, do around 15%. And all IT services, they said IT services, IT enabled services, everything will be at the safe harbor provision so that you can opt to go for a safe harbor of 15% there so that there is kind of a certainty on taxation. So that's why they are saying clubbing all the services and a single category of information technology, it will be charged 15.5%. So threshold, earlier threshold was less, 300 crores. Now even a big company with a 2,000 crores also doesn't have to pay the tax. So much they have to pay only 15%. Where it will help? Can somebody tell me? It will help all the big players like Google or Facebook or anyone else who are doing it, NVIDIA. They can come there and set up the shop here and they can develop the product for exporting it abroad. And the taxation in India will be very limited, certain. They will be paying only 15%. Otherwise, if they have to pay global US tax, America is 25 to 30%. So that much you know that you are getting a tax certainty for some companies to come happily and set up their own centers. So another one that is there is APA, same thing, advanced pricing arrangement, and I don't want to so much on this. By 2047, their companies are given tax benefit that I already told you. Okay. Which are the areas that Atmanirbhar that we are talking about? Which are the areas that we are focusing in this budget? Mainly that we are focusing on semiconductor. You know what happened to semiconductor? That you know that's where we are having a difficulty in procuring it. All the countries have become suddenly very restrictive because of the tariff barriers, because of the barriers which they created, like China has created and US has created. Biopharma. We had a problem with China. Our 70% of the active pharmaceutical ingredients are imported from China. So we never had we have a lot of pharma companies which are using the APA from China, but we don't have a facility. So we are going to have a biopharma Shakti. That means APA will be, that means active pharma ingredients will be produced in India. Similarly, high-tech tools. You remember that all these highways, we have the cranes and the bulldozers and kind of all the boring machines for the metro. So much of infrastructure going on. Do you know 90% of the machines are from where? Imported from abroad. So we don't have this high-tech tools for constructing high towers. If you have a tower of 40 floors and 50 floors, you have the metro construction, you have a huge bridge construction, you have construction of undersea cable laying. All that we don't have the structure. So high-tech tools room is being set up there. That is also with collaboration with the companies in Europe and the US. Scheme for container manufacturing. This is the one area where we have been spending lot of money. Because the container, we don't have container manufacturing, but India has a big export and import market for containers. So the empty containers used to come from who owns the container? And I was paying a rental for the container. From where? China, it is coming, in Korea, and from Taiwan. Everywhere the containers coming. Positioning empty container from Europe or UK or US or wherever we have the markets, bring it India. One ship will come full of empty containers. So now they decided that it is no longer viable. I am going to have the empty container production in India. So the Indian containers, and some of those which are in Jang and all that is manufactured outside India. Now this container is going to be produced in India so that you are having a control over. You don't have to pay the dead charges of importing the empty containers. Then textiles, that's one of the major exports that we wanted to do. Electronic component, that's another area where we have import substitution. Domestic manufacture, high value construction infrastructure. I told you, a lot of construction of the high value technical equipment that we need. 200 legacy industrial clusters, which have been there earlier. Now they have become different, like Hosur is one of those, Krishnagiri, Dharmaburi. We had virtually industrial clusters in every district that we had. Now they are reviewing those kind of legacy industrial corridors by making it active again. Affordable sports goods, that's one area where quality sports goods we are importing. I don't know how many of you know. You play any big game, I think that we don't have a good manufacturer, a good tennis racket, or a good golf equipment, or good shuttle equipment, or even good cricket balls, except this, few areas that we have expertise. Lot of other areas we're importing. So that is an area where government is creating a manufacturing facility. And the chemical part to have the domestic production. The rare earth, all of you know, that's where we had a lot of problem of getting the rare. Everybody has banned the purchase of it. India is negotiating with China. China says, you better sign end user policy. I'm not going to sell it to somebody. And the rare magnets are necessary for everything from automobiles to refrigerator to every electronic good. These magnets are necessary. And we are now tied down to this. 90% of those products are manufactured from China and exported to the country. So now we started making it as a production hub. We are joining the American Alliance for producing the rare earth. We have also given some 30,000 crore for developing the capacity to produce the rare magnets and rare earths. Yeah. Yeah.
I want to ask you regarding the green complex.
Yeah.
Yeah.
Yeah. Yeah, it is happening now because after signing the EU deal, EU FTA, all of you must have seen that, they are very strict about green. So now we have that card, CABM we call it. So we are kept in a mechanism, we are trapped. So we are trying to put in that mechanism to make sure the green component is captured everywhere. If they are exporting something to the Europe, they are not going to accept the product unless they tell me what labor I used, whether I used the energy efficient, and how much of the carbon credit I earned in that. They are not going to reject my goods if I don't do that. So that is why if you've seen that, some of you must have seen the EU FTA deal, they will immediate into that. So it is happening. It will take time, but it is now credit mechanism there. And then we have a huge carbon market because the international carbon trading market has been set up in India. So with that, now companies are already making good amount of money by exchanging the carbon credit. That everything there is a you do that everywhere there is. Another one which I wanted you to know about it is about the Atmanirbhar. See here, this I wanted to read the first one. There is an exemption from income tax of 5 years for a non-resident providing a capital goods equipment or a tooling to any tool manufacturing in a bonded zone. Did you see the high-tech tools which I was mentioning there? So if I want to manufacture a high-tech tool, the company has to come from Germany or any other some Scandinavian country. They can manufacture it if they are in a position to come here with a tax holiday. So that means any non-resident can come here. He can be giving the equipment. Like even Foxconn case, all of you must have, they are producing the iPhone. What happened? We had a situation where the equipment have been brought, but we started charging them tax on that. Now what happened? the manufacturing equipment for iPhone will not be subject to any tax. So that means Foxconn can, so they had a difficulty in getting through with the tax authorities. So now in India can become a manufacturing hub by allowing these equipments to come, by allowing the people to set up the tools also, because they don't want to bring the tools directly. They want to have their own hub where the tools can be manufactured, that will be used for manufacturing those, and they will be exporting the product. So to that extent, this is one of those important steps for non-resident. Safe harbor, I told you, and input for seafood that has been brought down, because whenever you are doing export of a seafood, you get an import license equivalent to that. What I can do with the import license? I can import like in fishing, I can import a fish trawler. Fish trawlers are all imported. So if I have a fish trawler, earlier it was only 1% of my export, I get the benefit. Now even 3% of the export, I get the benefit duty free for using that money for buying any importable goods for my own industry. That's why for seafood, they wanted to improve the export. They are giving the extra license for them. Extension of time for that is all for the exporters. They are not getting the money back because of the US trade barriers and all. People who exported, the money is not paid because they are not sure whether to pay the money or not. The trade barriers are there, tariff barriers are there. Government has told them stop something there. So if you don't bring it within 6 months, our RBI and tax authorities will tell you, no, if you're not brought within 6 months, then I'm going to levy you fine. And the FEMA also will say foreign exchange management tax. That means you are keeping the money abroad. You have not brought the proceeds. It's not that they kept the money abroad. It is the money has not been paid because of the change in the circumstances of the tariff barriers. The government has put the period to 1 year. Similarly, basic customs duty on such things have been taken out. I wouldn't go much into all this. This is all the same. And service sector. This is one area I wanted you to know. You see, in service sector is major area for our GDP, more than 50%. Here, what the government has done is allied health professionals, because you know that there are a lot of hospitals. India is becoming a hub of medical tourism. Many people are coming. They are also getting exported. A lot of nurses are getting exported to other countries there, the allied health professionals. But there is we have lacked a certification system, which is in line with the international standard. Now they are creating a certification system for this so that they can be employed freely in all the paramedical facilities. All the paramedical will have in 10 selected disciplines, like even the scanning. Like, India is becoming like a hub of identifying the radiology scans. Close to about 75 countries are providing the scan from the best hospitals to India. Those scans have to be read and interpreted. Doctors will do ultimately, radiologists will do, but there are these paralegal professionals will try to, medical professionals will see that and give the input, which the doctor will approve. So that profession is becoming a big profession. So government wants to provide employment. They are doing it. And this is our NSQ, the Quality Skill Upgradation Program. Skill quality. Here what happened, the NSQF program, they have taken up some sectors of 10 sectors there, where they graded them level 1 to level 10. So under the skill upgradation program, like, you can have a level 1, level 2, level 3, you can go up in that. Depending on that, you get, let us say you join some Apple iPhone manufacturing company at a level 1, your salary will be X. And after that, the institute will give you level 2 certificate after working for 1 year, undergoing some program. So now, whether the company gets it or not, but MSQF certificate training centers are there. So you can go up to level 10. Level 10, you are a certified expert manufacturer. So that person will command a good salary. So this has been now standardized for close to 10 sectors. Now government is trying to push it to as many sectors as possible, where the standardization certification is being done. And medical tourism, All India Institute of Ayurveda, and this ABGC, all of you must know about this, whatever that animation and your gaming and your whatever that, the latest programs which are there with the X video and all that, there's a lot of kind of a demand for the ABGC, and there is something called the ABGC XR also. So these are some of those areas where digital experts are needed. So they thought that it need not be a graduation course, where in the schools itself they can have a ABGC labs. So with that, you can acquire the qualification which are necessary for you for the digital content creator. The kind of content creators India is providing for all the kind of, that social media. So, but they are not qualified. They're kind of scattered kind of system we have. So with the ABGC, the video content creators, and also your gaming creators. Game creators, a lot of game creators are doing not a job directly, they are doing job from home. So these things have been standardized. So the AVQC creator labs are being set up in the schools. You don't have to run to a place somewhere else. That will help them to acquire the qualification. NID design and maybe the talent development, that's all part of it. So I won't go much into that. Yeah, the another scheme is about upskilling 10,000 guides in iconic tourist sites. Tax, I won't go. Manufacturing, financial market, yeah. This is one of those areas where electrification corporation and others are giving a lot of funding. STT, that is future increase from 0.0 to 0.05. That is fine. I think farmers, yeah. Agriculture, what are they doing? Agriculture, they are giving some special benefit for some crops, like walnut, almond, and pine. These are imported by India. They don't want to pay the import duty on that. Even if it is kind of a dump from some countries, they want to create a facility of manufacturing within India. Similarly, veterinary colleges, there's no para-vet categories because there are lots and lots of people are the pets and the cattle which are being, reared at home. So they wanted to have the para-vet clinics and para-vet category of people who can deal with all the normal illnesses of the kind of veterinary issues. And similarly, reservoirs, which are storage for the water, government has a scheme for 500 reservoirs. They're calling it Amrit Sarovar. And ICOR and the AI systems, they want to give the farmers a real-time information on the climate and the changes and pest incidents and all that. And similarly, fish catch. This is one of the important provision. Some people are catching the fish on the exclusive economic zone. EEZ is how many kilometers? How much? 200. So you have this up to 12 nautical mile is your own coastal area. Beyond 12, up to 200 is the exclusive economic zone, EEZ. You can go and exploit it economically. Once you are catching the fish, that fish did not come to the shore again. It can be sold on high seas. There will be one vessel waiting on the 200 kilometers. You can sell the catch, prawns and fishes there. And that you can sell it, it will be treated as an export. So this is some facility that government has brought in so that you know that you are able to sell fresh quality of food, fresh quality of seafoods directly to the people. Similarly, the cooperative societies are being encouraged to have cattle feed and seed produce that is exempt from tax. And they also can get the dividend exemption if they are investing in the stocks and paying the dividend to the members. No tax for the cooperative society. Other things I won't say much on that. And, these are okay. Infrastructure, something I wanted to say. Yeah, I think 7. Infrastructure, I want to say only a few things on infrastructure. This is something on there are a lot of these investment trusts that are being there. Like that if you are looking at the investment trust for the infrastructure, INVIT, or for real estate, REIT, or national industrial finance, that is there. Then there is again that national infrastructure finance and NAFID. Here, what happens is that each one of these have a different role. These are all NAFID is promoted by the government with 100% support. NIF is provided by the government by 50% support. What do they do is, like I only talk about this in INVIT and REITs are like when highway is coming up, Chennai to Trichy expressway. If somebody invests money, the person who is investing money, let us say it costs about 10,000 crores, he will go and raise money under the INVIT scheme. So people will be subscribing to it by way of bonds or debentures. So that money will have some interest payment will be given to them. So he doesn't have to put that much money. He can raise this. That will be guaranteed by the government and it will be traded in the market. It will be like a security traded in the stock market. Similarly, REITs, the real estate assets are put in the pool of the real estate trust and that will be traded in the market. People can buy the pool of real estate assets. That will also be traded. That gives liquidity to the investors in real estate companies. They can free because they don't have to hold the liquidity. They can put it in the pool, get the money. It will be shared by all the public, whomsoever wants to invest in the REITs. Similarly, NIF also, where the government is selling them, infrastructure funds have a lot of problems because risk is there. The highway may not go, some problem will come, some contractor may run away, or some issues will be coming on acquisition. So the government guarantees. So what happens is that government will say, I'm giving you a bond for Chennai Trichy highway to NIAF. I'll give you 5,000 crore. But the money will be given by the banks to the NIAF. NIAF will give the money to the contractor. So there is a guarantee. If something happens, banks doesn't have to lose the money. It is the NIAF which is going to guarantee the scheme. Similarly, NAFID is also 100% owned by government, where they'll be giving the funding to the infrastructure companies and MSMEs primarily. So there is a risk guarantee fund and there is a real estate assets, the public sector. This is one important measure that government has done. All the public sector, you must have seen heavy vehicle factory, Avadi, ICF Perambur, they all have the huge amount of assets, real estate lying there without any use. So government wants to put all these real estate assets to use by creating this kind of a pool of the real estate assets, the UPSC. That asset will be created when REIT will be created. That means imagine the kind of money that is going to come by the real estate value of these assets. So they will be unlocked. That value will be available to public sector for revival, or they can use it for their own whatever internal use. So dedicated freight corridor, national waterways, coastal cargo they want to promote, and seaplane scheme and whatever. I think I can go on, but I'll stop here. Another area is about the energy security. Somebody was asking about the carbon credit and all this. The government wants to have the self-reliance on, because we're importing 90% of our oil from there. At the same time that, we want to rely on alternate source of energy. That way, if you see, the nuclear power plants have been given a lot of concession here. Even a small plant can be set up easily without much of a kind of a liability classes will affect you. So the carbon capture utilization storage is done. This is very much essential for implementing the Euro 50 also. Then the sodium antimonate, which is used in solar cells, that has been exempt from the duty. So your solar shifting would cost less, so that you can adopt to solar. And similarly, for critical minerals, there is no basic custom. BCD is a basic custom duty. Basic custom duty is being taken away. And exemption has been given for capital goods, for energy storage. Now becoming, with the battery cars coming in, energy storage and lithium ion storage is becoming a big thing. Even the storage system will be exempt from the BCD, and there will be a lot of exemption on the capital goods. For nuclear power projects, so up to 2035, even small plant can be set up. Now we are going to see a lot of nuclear plant coming up in small areas. It is easy for them to kind of set up a alternate energy and biogas. Hello guys, I think I can go on with this. For the time being, I will stop here. I think I would not be able to cover this economic survey, but economic survey is again by and large and the same kind of issues there. I've got those set of slides on economic survey. Only thing I want to tell you is that economic survey has certain important features in the current economic survey. That is basically, I'm on the slide, first slide. It had about 18 areas, 18 parts which are there out of the 600 and odd pages. I don't want you to go through all that. I have compressed it to those around even 18 areas, only 12 areas are very important. You can focus on those 12 areas for your own preparation. Which will give you an idea about where all the government is focusing as far as economic survey is concerned. Go there. Yeah. So here it will be like whatever these areas are the ones which is covered here. 16 parts are there. Sorry, 680 pages are there. So here I would only talk about macroeconomic performance. So one thing I want to highlight here is India has received a higher rating from the international rating agencies. That is a kind of these three agencies are DBRS based in the US and Canada. It's a Canadian agency. They gave BBB low to BBB. S&P has increased the rating from BBB minus to BBB. And again, R&I, it's a Japanese rating agency. They have increased the rating from BBB to BBB plus. So ultimately, whatever we do good, whether somebody outside is recognizing that you are stable, country rating is good or not. How does it affect us? If the country rating is good, what happens? Anybody? Why should the rating of a country is important? When we borrow money, when Indian companies want to borrow money from abroad, they look at the country rating. If your country rating is low, you have to pay some LIBOR plus, London Interbanking Offer Rate, LIBOR plus. Normally it is 5.5% plus whatever. If it is country low rating, they charge you 2% plus. High rating, they charge you 1%. And insurance, when you have this, your country rating is good, insurance premium will be less. Okay. That's how the country rating helps you a lot. So I wanted you to have a look at it. Rocky, I think it's all the same thing with GDP, where India is, and what is the growth and inflation, and these are here. Maybe economic, labor reforms, and deficit, fiscal deficit. What is fiscal deficit? What is trade deficit? What is current account balance? And agriculture growth, where all we are there. So this is full of maybe indicators of how the economy is growing, e-way bill, and this is a kind of, the index of industrial production, purchase manager index. So we track a lot of data to find out an economic survey, whether the economy is growing or not. It's like certainly if we are growing there, we can find out from our height that how much we grow. But the country is growing or not, you want to know industry is growing or not. You see, these are the indexes that we need to know. Industry grows, I need to have this 4 critical data. Where the construction is growing, I need to know these 4 data. If these 4 data are good, then I can be safe that yes, something is happening. So this will help you for the projection. Similarly, that for momentum in service activity, inflation, and that's all. I think nudge. This is one of those areas which income tax has started. That's called nudge, non-intrusive usage of data to guide and enable. Because data has been collected by income tax and tell you bought a property, you send this expenditure, and you had a foreign asset. They give you the information that makes the people to realize that yes, I think the department knows what I done. So they start paying the taxes. This is one area where income tax has been sending the notices to lakhs of people, and they have found success. If you look at it here, some 25,000 taxpayers have revised the return, and they have the 61% have responded positively. Foreign assets of 29,000 crores have come into it because of the notice. And similarly, wrong deduction of 80 GGC, they have done. Some 2,000 crores have come into the system. And similarly, that house rent allowance wrongly claimed. Some people have paid the taxes. Third party reporting, some accuracy, TDS have been paid. So these are some of those non-genuine agricultural income. Somebody will say, I'm earning agricultural income, no tax. So they found that it is a bogus kind of area. So these are some of those which are there. Why this GST has gone up? What are the GST? How much is there for each one of those? The dividends and profit. This is one of the areas where public sector undertakings have been a lot of, paying the taxes. Number of the gross turnover has gone up. The profit has also gone up from 20 to 25. Public sector has also gone up. And who is the beneficiary of the dividend? Government, because government holds a large stake in the public sector. If you look at it, the 1.39 lakh crore dividend has been paid by the public sector undertaking to the government. Huh? Yes. Yeah. Yeah. We have.
Public sector banks are going to get more healthier, which will eventually get into the pocket of the government with a massive amount of dividend. Correct?
That will happen. 100% will happen. You are right. Perfectly right. You hit the nail. Because the NPA of the bank earlier 9% as non-performing asset has come down to 2% now because of IBC. And now IBC has kind of recovered 19 lakh crores to the banking system. Because that much insolvent companies which are really don't know how to do that under BIFR regime, debt recovery regime, they were all taking about 15 years, 20 years to resolve. Now, like our friend says, it has come down to 1 year, 2 years, 3 years. Within 2, 3 years, it will be resolved. The bank is preferring IBC for recovery, and bank NP has come down. And if somebody doesn't think the banks, that fellow run to us NCLT, he's so scared. RBI is saying in the report, oh my God, they are so scared of this thing. No longer do the situation. It is not the way. You must have seen the credit discipline was not there earlier. Now, if you don't pay 3 months, after 3 months, first installment you miss, it will become a special mention account. 3 installments you do after that, it become a NPA. You don't have to wait for years to get NPA. After NPA, the bank files an application before us. We will take over the company. So now this has become like an important tool to recover money. IBC is one of the areas by which ease of doing business index has also come down to that. Okay. This is one of the telling examples that public sector has been doing pretty well. The profit has improved and the dividend also has improved. That's all, guys. Maybe all this you can read. Thank you. Yeah.
copy must be having and giving it to the library. Economics.
Thank you so much, sir. That was so insightful. To summarize the entire budget for us within an hour is almost close to impossible. So thank you so much. But you covered both of it, sir. Also, along with concepts and analysis, it was truly profound. What stayed with me is about how we're also going to ensure fiscal discipline while we attain our goals of manufacturing, the kind of trust-based governance that we're going to have. So thank you so much, sir. This is so insightful. With that, we also have another esteemed guest with us, Mrs. Geeta Ravichandran, IRS officer and also held position of Chief Commissioner of Income Tax and Transfer Pricing at Mumbai. She was also head of tax administration in two important regions as Principal Chief Commissioner of Income Tax for Tamil Nadu and Pondicherry. She has completed her executive management program from IIM Bangalore and Wharton University, USA, along with a lot of other accomplishments. Welcome, ma'am. Would you like to provide your thoughts?
Thank you. It's been a long session and we went into a lot of, Ravi went into the granular details of the budget. So broadly speaking, I just want that you have a broader understanding. This exercise happens every year, the budgetary exercise. So what the process is there's a lot of consultation and discussion before there are changes effected to the existing system. This is an example of the responsive governance when you actually make necessary changes to an existing system to make it more effective and more contribute to the economy. Now we have all read about the geopolitical challenges, the tariffs, and it's so interesting to see the provisions that have been introduced here, as Ravi was mentioning, on providing tax holidays to NRIs who come and set up certain infrastructure. There is also an approach to risk mitigation, to strengthening our production, to making available jobs. If you looked at whatever they are proposing to bring in for the tourism industry, these were things which were not available even a couple of years ago. Now you know that when traditional jobs, considering the attitude of the present generation also, there's a great deal of openness. And this kind of upskilling and providing opportunities in areas which may interest this generation, it is a significant move and it shows just an example of what a responsive example of responsive governance. I think Ravi has gone into granular detail. Listening to him today, even I learned a few things. So I hope this has been useful to all of you, and as you can read up on the economic survey to have more clarity. Thank you and all the best.
Thank you so much, ma'am. So for students, we will have a feedback form at the front desk. So for programs in the future, we will make sure to include you. So kindly fill in the feedback forms at the front desk. With that, we will open up the floor for Q&A and also to online participants. I know we had a lot of questions during the session, but if anybody would like to ask questions now, we're opening up the floor.
Late in the day to ask question, I think too much has been given. Too much of information overload. I think if you can digest some part of it, I'll be happy. So at least for writing some, civil service essays or some preliminary questions that you can have an idea where to go and what to study. Something else you have in your mind, you can ask.
To be in the what to contribute to the government.
Yeah.
நாங்களாம் demonetization அப்போ queueல இருக்கும்போது you were in the war room.
Yeah.
Data mine பண்ணிட்டு இருந்தீங்க நீங்க. So thanks for both of you and thanks for the Chinmaya Academy. உங்களை மாதிரி நீங்க சொல்றத கேக்குறதுக்கே it's a privilege.
Thank you. Thank you so much. Yeah. Okay. Thank you.
Thank you, sir. I'm sure it will benefit all our UPSC and Tnpsc aspirants. With that, we will move to, we also have Mrs. Radha with us. We're very honored to have ex-IRS officer. Welcome, ma'am. I would now like to request Mr. Ram Desikan, sir, to present mementos to our esteemed guests. Mr. Ravichandran, sir, Mrs. Geeta Ravichandran, and Mrs. Radha. Final note of thanks. Gratitude to Mr. Ravichandran, Mrs. Ravichandran, Mrs. Radha, for accepting our invitation and sharing such insightful and inspiring thoughts with us. We would also like to thank Mr. Ram Mohan for his opening address and his guidance, faculty members for their support, administration staff, students, and participants of today's session. Thanks for making this a great event. Have a nice day. Thank you for the closing address, ma'am.
Let's finish with the closing prayer. Om Purnam Purnamudachyate Purnasya Purnamadhaya Purnameva Vasishyate Om Shanti 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 Harihi Om Shri Gurubhyo Namaha Harihi Om. Thank you so much.